Amrita, as we take a look at, say, more sanctions coming online, are we going to expect oil exports from Iran to legit go to zero now?
Well, I think they are quite close to zero already. In May, they've managed to load about 900,000 barrels per day. But if you actually look at where they've discharged, there's a little bit, about 2 cargoes into Syria via Turkey, and a couple that are still floating off China. They haven't even actually been discharged. So that's pretty much, maybe 250,000 barrels per day max. June arrivals right now, again, where you can track, it's less than 100,000 barrels per day. For all intents and purposes, we are almost there.
Is the market accurately reflecting that?
No, because again, this is, the demand fears, and now everybody's talking about the G20 with Xi and Trump supposed to meet. But equally, the backwardation of the curves, whether it be Brent, Dubai, they're still very steep, despite all the kind of demand weakness and the fears. And that is clearly showing you that supplies are continuing to fall. We've definitely seen refineries struggling in this margins environment. So our runs numbers have come down since the start of the year, but our supply numbers have come down even more because of Iran, Venezuela, and other outages that we've seen.
So the Vitol CEO was talking to Bloomberg and said earlier today, I'm more concerned about geopolitical incidents than the true economic factors driving that. I think that it's more likely a political surprise that may throw us off course than the general economic outlook. How do you feel how the market is positioned to deal with these extraneous shocks like Iran that you actually don't know how to necessarily price in?
No, I think he's exactly right. I think the market's very complacent. The complacency comes from the view that U.S. shale will continue to grow into infinity at whatever the price deck is. And as a result of that, there isn't that much spare capacity. There's a little bit in Saudi Arabia, UAE, Kuwait, but that's about it. If we get multiple outages, the world doesn't have the capacity to cope. And that's when you see surging oil prices, and you effectively destroy the global economy as a result of that. I think the market isn't positioned too much on the long side at all. If anything, the CTAs and the kind of high frequency side of things was short. We've seen some short covering rally because of what's been going on in the Straits of Hormuz. But beyond that, the market isn't long at these levels. Definitely, Brent is barely $65.
Interesting. So walk me ahead. OPEC, July 2nd, July 1st. How does all of this set the stage with OPEC Plus?
Well, I think, again, they are in a bit of a rock and hard place because, say, for instance, Saudi Arabia, they keep getting calls from their customers saying, look, we aren't buying Iranian crude. We need more of your crude. But at the same time, they are struggling and saying demand might be coming off. The economy might be slowing. So what do? Our base case still is that they roll forward the existing deal, which is a 1.2 million barrels per day cut. Again, Russia is going to oppose a little bit. They always do. The companies don't really like being in this deal, particularly one or two. But again, given where prices are, if we were at $75 or $80, I think they could have come and increased production a bit. At current prices, given the fragility of the global economy, our rollover should be the base case.